Hello guys, hope you guys doing okay. Today I will be teaching you guys, showing you how you can, get a bias from the daily time frame. Do this a lot, and there's something I noticed on, the internet. A lot of traders or some gurus that actually show you how this works out, but they don't tell you when to not use it. So I will be showing you guys where exactly you should use this and where you shouldn't. You see when you're on a daily time frame. So what we are basically going to be looking for is liquidity grabs and liquidity rate on a daily time frame. So we're going to see how the previous day's candle closed, and to use that to predict the next day's candle. So if you look at price, so we are on this day. So you see we have on the previous high of the day. So the previous high was this. So we see price rate and closed above this candle. So what are we expecting? We are expecting another close like this. So let's see if we have that. Okay, so we need, so you see this was that was the direction. So that was your drawn liquidity. So you see price went, took out the high, but what happened? Price closed back into the range. So if, as prices close back into the range, what we are expecting is for price to take out this low of this day. So going into tomorrow, I want to see this low being taken out. So you see, we took out the low, and look at what happened. We closed a little bit outside the range. It's still a close. So what are we anticipating? We're anticipating for price to come again and take out this candle's low. That's what we're anticipating right now. Price will take out this candle's low. So let's see if that happens. Okay, it did not happen. So this is the area where I would like you guys to pay attention on daily time frames when you're looking for buyers using this strategy. You want to make use of some certain PD arrays, and again, you don't want to know when a retracement or a pullback is happening unless it does happen. But there is an advanced way to be able to spot stuff like this. So all you can do is basically, use fair value gaps, see the reaction off of it. So you add these things with fair value gaps, other blocks, to be able to get a bias. So it's not, I don't want you to just basically go on this time frame, this daily time frame, and be waiting for price to be so mechanical. So as you can see, we did not take out this low. So the next day, so actually this is going to be a consolidation day. So whenever we have price not taking out the high or the low, it's definitely a consolidation day. So now we took out this high and we close inside of it. Again, you guys could remember I was talking about using I was talking about using the PD arrays around the daily time frame. So if you can look at this clearly, you can clearly see we are bouncing off of this. We are currently bouncing off of this bullish order block, as you can see, and price is looking very, very much bullish. Yes, you saw the raid, and what's next? You saw how price closed inside the range. But should you be looking for sales? No, I don't think so. I don't think your buyers should be selling because of this single thing. So this is where a lot of traders don't tell you. So now you're using this PD array, you're leaning bullish. So I don't expect you, or you don't expect this market to come lower. So if you look at this, days like this, you might say, okay, I will just stay off the charts. So if we were going off the norm strategy, this is what would have been waiting for. Price would take out this low, and look at that. Price did not. Price instead went higher, but wasn't able to touch the high or the low of the day. So going on to the next day, as you can see, a very strong push and a very strong close above all the highs in this area. So what are we expecting if price is closing like this? We want to be bullish. So we're expecting price to, this is our drawn liquidity. So no matter how the candle close, we're expecting an open, low, high, close. So we need price to close. So that is our drawn liquidity currently. So no matter what we are doing, we're looking to take out that high. As you see, we had an open, low, high, close. The next day, what are we expecting? The same thing, because in this area is like no man's land, as you can see. So we are currently in all-time high. So you don't know how far this price can go higher. So this is what we're doing. So if I play price again, we took out that high. So you see how if you was using just the simple a rate, then price closes within the range, you would have taken some huge amount of losses within these 2 days. But you see how we use the POIs in the same area, and we are able to get ourselves a decent lean on bias because before you get into the market, I always advise for you to get some certain sort of direction, so you'll be able to, because as a day trader you need to use higher time frames to get your buys, then you go on the lower time frames to look for some certain entry. So this is what I basically do every single day. So if we go again higher, so now we have a close above that, I'm expecting us to close, and again we have little to no wick, so I'm expecting this high has to get taken out. So on the lower time frames, I want to be looking for buys. As you can see, beautiful, as I told you, we have an open, low, a high, and a close. So this is what you want to be looking for on the daily time frame. You want to be looking if you want to get a direction off of it, especially for the day traders. This is especially for day traders. So this is what I do. I go on a higher time frame. When I say higher time frames, my higher time frames are the daily, the weekly, maximum. I look at the weekly mostly during the beginning of the month and the end of the month. That is the only time I look at the weekly. So we have the daily, the weekly first, the daily, then the 4 hours, then the 1 hour. I use the 15-minute for quick POIs, and the 5-minute and the 1 minute for entries. So if you look at this on the 5-minute, you are probably pulling yourself into some sort of 4 hours or 1 hour fair value gap in this area to then go higher. Because why? You are anticipating that price. The daily candle is supposed to bring out an open, a low, and a high. So that's how a bullish candle, that's how every single bullish candle closes. So you need to see an open high, the open low, high, close. So this is the manipulation leg. You want to find yourself in this area. So this is how you can be able to get buys. So let me play price again and see what happens. So again, you're just being bullish. So let's see. Okay, we did take out this high, but look at this. This is where the reversal starts coming in. So you see, we took out this high, and again we closed back into this range. At this point, I don't think you want to continue leaning bullish, because just this is a quick sign of that the sellers are trying to get into the market. So now, if let's say we're using the mechanical way, we're expecting the low to be taken out. Okay, see, now the low was taken out, but what happened at the end of the day? We did close bullish. So we went and closed above the high. And again, if you guys go on a time frame lower than this, you're going to see this leg is probably pulling into some sort of PDRA on a lower higher time frame, like probably the 1 hour or the 4 hours. There's probably some fair value gap there or some other block there. As it taps into it, you should be getting into you see some reaction that's going to lean you bullish, get into the buys. This is what I have for you guys today, and I hope this video helps out. If you guys want me to make more videos like this, just comment, like, subscribe, and share this video. Thank you very much.